Starting with the crude prices, and that has jumped to $112 per barrel today, gaining almost 0.5% on your screens there. And this comes after Japan pledged to pump in more money to boost its economy. Meanwhile, the positive growth cues from China and the US also have boosted the crude prices. We start with a check on the gold prices as well, which inched higher today on back of more monetary stimulus from the Bank of Japan. The Bank of Japan has announced that it would switch to an open-ended commitment to buy assets next year and double its inflation target to 2%. The easing move sent the yen lower initially before the currency firmed back against the greenback and later during the day. The Tokyo's gold futures also have hit a contract high third time in the month of January 2013. Let's take it to our experts then, and joining us in the studio is Mr. Vijay Bhamwani. He's author and CEO of BSPLindia.com. Vijay, let's start with the precious metal space first and the kind of strength that we have continued to see into the space, especially after the Japan statements. How much of a further run-up do you see from these current levels?
Manisha, even though international prices do appear a little firm, we are unable to actually rally too much because we have an overhang of regulatory intervention. We have also the strength in the Indian rupee, which is inhibiting the upsides. So my guess is, even if gold prices were to edge higher from here, the first inflection point or resistance will be at 31,150. And at the most, I don't think it'll stretch that far, but at the most 31,400. That's where selling pressure will emerge at higher levels. And as silver is concerned, I think silver is likely to basically gain back its feet. And the downside seems to be limited at 58,750. That's where buying will emerge at lower levels. I would expect silver to go past 59,800.
All right, so buying calls coming in for both of them. Of course, wait for the current levels to get in. Vijay, also, what's your sense for crude prices now? Because near 4-month highs, NYMEX has been holding $95 on the higher side, and Brent also have surged quite strongly today.
That's right, Manisha. Here again, even though the overseas markets are witnessing a good traction, the rupee-dollar parity is curtailing the gains here. I've been talking about 5180 to 5200 being a resistance. Once it's taken out forcefully, once 5200 is taken out forcefully, especially for one trading session on a closing basis with the increased volumes and expanded open interest, my guess is people sitting on the fence are likely to latch on to the buy side. We'll have to wait for today's closing, and if at all the closing is above 5200, I think I would go out and buy a little bit of crude oil.
Also, Vijay, what's your sense coming in for the base metal space? There have been huge positive noises coming about lead demand in China, the battery demand because of the huge cold there, and also copper prices holding steady at $8,100 per ton. How does that show on charts?
Chartically, base metals pack has shown some amount of strength, although I don't see exuberance in prices, especially price with correlated to volumes and open interest. But you're right, copper is showing some signs of strength, and the 444 level seems to be the next resistance point on the upsides. Where lead is concerned, it's showing 0.75% of gains. And above 124.5, I guess, there could be a very minor bear squeeze which can take it to 126 also in the coming two trading sessions.
Vijay, we've done much part of January till time, and the kind of easy monetary policy that the markets are now looking at from US, from Japan and China as well. What's your sense going forward? I mean, of course, we are talking about asset classes here. We've seen equities gain up quite strongly. Commodities have been holding firm as well. Where do you see the major smart money moving?
I think in the Indian context, it's going to be agri, and second, it's going to be industrials. Not so much in precious metals in the leverage segment, because we have financial products which are being attempted to replace the physical demand. So I would basically bet on industrial metals like aluminium, copper, lead, zinc, if they break out above the previous swing highs. Right now it's a little premature, but one needs to keep watching the ticker fairly keenly. Say aluminium above the 110 levels, lead above 124.5, zinc above the 110.5 would present buy opportunities.
All right, so good going in case of base metal space today, 0.5% or 1% of a run-up coming in. Let's also get in then Mr. T. Gnanshekhar. He's Director Comtrends Research and Fund Management, and he joins us on a Mumbai phone line. Mr. Gnanshekhar, hi, welcome to the show. What's your sense coming in because of the easy monetary policy that Japan has come out with today, open-ended commitment to buying? How do you think that would play up, especially in case of precious metals?
More than precious metals, I think it's going to be more beneficial for the base metal segment because we know that Japan is also one of the largest copper importers and copper traders. So I think that's going to be a big plus as far as copper and a few other metals are concerned. Precious metals also, to a certain extent, it might have a sentimental effect, and more on silver compared to gold, I feel, because gold has got a lot of resistance points going forward, and it might find it difficult to cross. With so much of positive factors, it's really not having that kind of a momentum at this point in time. So my sense is that silver on the precious metal side looks good, and the base metals, copper and a few other metals.
Mr. Gyanshekar, as you spoke about base metals, which one would you pick up in the market there? Because lead, of course, has strong fundamentals right now. Copper, being the primary metal, has seen strong gains coming in. Aluminum also has seen a lot of strength in the recent sessions. Which one would you want to pick?
See, I would like to go with copper, zinc, and nickel because all three tend to rally as when the economic strength comes in. So I feel these three would be a good pick in the order of copper, nickel, and zinc.
Let's talk about the energy space with you as well, Mr. Gyanshekar. What's your sense coming in for that one? Good gains and holding, higher highs being made in for that space as well.
Fundamentally, a lot of strength in crude at this point in time. We have gone over the fiscal cliff, so that's a massive relief as far as the energy markets are concerned. And then you also have some supply issues in North Africa, so that's going to support prices now. I'm getting a sense that it could cross $100, though there'll be a lot of noise made because the economic recovery will get stalled if it crosses 100. But technically, it looks like it can cross that in the near term. So I think I'd be buying on dips from here.
Mr. Gyanshekar, one final question and ask that to Vijay as well. Which sector are you really betting on? Much of the data is out. We have seen the monetary policy also continue extending into 2013. Between precious metals, energy, base metals, where would you put your money in?
See, I would actually like some of the base metals which have been sort of lagging behind in the last year. They might catch up, and the only deterrent is the huge stocks building up in these base metals. If the market tends to ignore that, then certainly I think base metals would outperform all other commodities, and specifically copper and nickel and zinc. So these three I look forward to, and I think we should not forget silver as well, because that could also the base metal strength would sort of rub off on silver to a great extent.
All right, Mr. Gyanshekar, we'll let you go at that. Thank you so much for joining us. So both are experts really betting on base metal prices as we go forward into 2013. But meanwhile, in the Indian jewelry markets, the markets are witnessing selling pressure today following the government's move to hike gold and platinum import duty from 4% to 6%. The move aimed at curbing imports of the precious metals to check the widening current account deficit. TBZ, Titan, PC Jewelers, Gitanjali Gems all declined nearly 2% today into the markets there. Abhishek Gupta, President Gitanjali Gems, says that the hike in import duty on gold will impact their volumes and they will pass on the hike to the customers.
Although we are a big diamond jeweler, but a lot of our gold jewelry portfolio has this investment class of consumers, and they will take this as a price rise. And we are yet to see their reaction on the volumes. It will be passed on to the consumers. It will be taken as a price rise. Unless and until there is a trigger in volumes, we don't expect prices to go up from here in a big way.